Exposing the money maze, how billionaires avoid tax on a massive scale. In the world of the ultra-wealthy, paying taxes is often optional. Through an intricate system of financial loopholes and tax shelters, billionaires can significantly lower their tax bills, amassing even greater fortunes. The first method billionaires use is income shifting. Instead of earning directly, they route their income through companies or trusts in low-tax jurisdictions, minimizing their overall tax burden. Billionaires also tap into the power of capital gains. They buy assets, like stocks or real estate, which grow over time. Taxes aren't due until these assets are sold, allowing the wealth to accumulate tax-free. Another strategy is the tax-free loan trick. Wealthy individuals can borrow against their assets, and, as loans aren't considered income, they aren't taxed. Billionaires often invest in tax-free bonds. The interest earned on these bonds is usually exempt from federal taxes, allowing profits to be enjoyed tax-free. They also exploit tax deductions. By claiming significant deductions for charity or business expenses, billionaires can reduce their taxable income. Estate planning is another tool in the billionaire's tax avoidance toolkit. They use trusts and inheritances to pass on wealth, often escaping inheritance tax. Philanthropy is a favorite tax-saving ploy. By donating to charitable organizations, billionaires can deduct these contributions from their taxable income. Billionaires also use the buy, borrow, die strategy. They buy assets, borrow against them, and then pass them on to their heirs, often avoiding capital gains taxes. Then, there's the corporate tax shield. Billionaires often own businesses, which can be used to offset individual tax liabilities. Another tactic is exploiting tax haven loopholes. By moving wealth offshore, billionaires can often avoid taxes altogether. They also use high-priced tax lawyers to exploit the complex tax code. These experts find obscure deductions and credits to reduce the overall tax bill. Loss carry-forward provisions are another trick. These allow billionaires to offset current year profits with past year losses, reducing taxable income. Billionaires may also use deferred compensation plans. They accrue income now but don't receive it until later years, delaying tax payment. They can also exploit like-kind exchanges. This allows them to swap one asset for another without triggering a taxable event. Another strategy is the use of life insurance policies. These can be structured to accumulate cash value tax-free. Billionaires also might invest in oil and gas partnerships. These offer significant tax advantages, including deductions for drilling costs. They also use real estate to their advantage. By depreciating the value of properties, they can reduce their taxable income. Lastly, billionaires may leverage the tax benefits of owning sports teams. These can offer significant deductions and credits. So, while most of us dutifully pay our share, the uber-wealthy use these strategies to sidestep the tax collector. This video has given you a glimpse into the world of billionaire tax avoidance. As Benjamin Franklin once said, nothing is certain except death and taxes. But for the world's billionaires, it seems taxes aren't quite so certain.